trading strategy even work? Are online trading gurus telling you false information? In this video I will backtest 100 times a very famous trading strategy called the parabolic SAR indicator strategy. Yes, you heard it right. Testing 100 times takes time and will most likely prove if you should risk your hard-earned money using this strategy. This video will be very similar to the CCI and MACD video I made a while ago. If you want to know if those strategies work after testing 100 times, check those videos out. On TradingView, this is what the parabolic SAR indicator looks like. Once you add it on your chart, you will see some dots above and below the candles. If you have never heard about this parabolic SAR indicator, check out my previous video where I explain this indicator in detail. In my fractal video, I talked about how fractal works on a simple U pattern and why it gives a lot of false signals. Just like the fractal indicator, parabolic SAR uses a method called SAR, or stop and reverse, to find the entry signals. So most of the entry signals given by the parabolic SAR indicator are unreliable. But in my last video, I showed you a way to filter these false signals by using other indicators like alligator and 200 period moving average. Alligator and moving average are both used to find the direction of the trend. Since parabolic SAR gives a lot of false signals on its own, we can use the moving average and the alligator to avoid taking false entries. The strategy I am going to show is a combination of the parabolic SAR, the alligator, and the 200 period moving average. If you have never heard about the alligator indicator, check out my previous videos on this channel. To filter false signals given by the parabolic SAR, I have modified the strategy something like this. When the parabolic SAR gives a buy entry signal, the entry candle has to be above the 200 period moving average, and it has to be over the jaw line. The teeth line should be below the lips line and above the jaw line. Furthermore, the entry candle should not touch the jaw line. Also, the parabolic dot should be above the 200 period moving average. In this long setup, you can set your stop loss just below the parabolic dot. It sounds confusing, I know, but it works. So let's look at a short setup. When the parabolic SAR gives a sell entry signal, the entry candle has to be below the 200 period moving average, and it has to be below the jaw line. The teeth line should be above the lips line and below the jaw line. Furthermore, the entry candle should not touch the jaw line. Also, the parabolic SAR dot should be below the 200 period moving average. In this short setup, you can set your stop loss just above the parabolic dot. In both long and short setups, you can trail your stop loss with the parabolic dots. Trailing the stop loss like this will help you reduce the loss in a losing trade and will help you make more profit in a winning trade. Furthermore, you can use this parabolic SAR indicator as a trailing stop loss with any strategies out there, just like I used it with the MACD indicator in my $50 small account video series. I have tested many different strategies 100 times on this channel, and in most of those videos, I have used a fixed risk to reward ratio. I did that to make sure I test those strategies in the latest and same market conditions. In this video, I am going to test this parabolic SAR indicator 100 times with a fixed risk to reward ratio, because we want to see how well it performs as an entry signal generator, and because it will also help us compare the parabolic SAR with other indicators we have tested before. So the question is, if you enter trades using parabolic SAR indicator, will you become a profitable trader? In the next few minutes, I will show you how the profit graph looks like after taking 100 trades, and how much is the real winning percentage of the parabolic SAR indicator strategy, and how many losers you can expect in a row. I will fast forward the next clip to save your time. The following clip can help you understand how this strategy looks in different market conditions, so do watch carefully. I'm using the official Trading Rush app for backtesting. It comes with a backtester feature. The app is officially available to everyone for absolutely free. You can download it using the link in the description. You can use it to test your trading strategy as well. It will automatically calculate the win rate and number of losers and winners you can have in a strategy in just one click. It saves a lot of time. If you are a subscriber, you know most of the time when I show these kinds of backtesting clips, I might say same words and lines in the voiceover, because it is very difficult to come up with new lines in every video when the topic remains very similar. But these backtesting clips are very important to show, so you can verify and look at how these strategy works in different market conditions. Here for backtesting, I have used Euro JPY chart. This strategy works on any time frame, and also works on both Forex and stock markets. Here I'm using 30 minutes time frame. I'm also taking sell setup in this example. Strategy for sell setup is very similar to buy setup. You can see how the win rate and profit graph changes as I take more trades. The real win rate will be revealed when we reach 100 trades or more. There are different ways to set profit targets. Here in this example, profit target was set 1.5 times more than the risk I was taking. You should always take profit more than the risk you are willing to take. If you are wondering why I'm only taking 1.5 times more profit and not 2 to 3 times, well, you see, the risk to reward ratio and win rate are inversely proportional to each other. In other words, if I increase my risk to reward ratio, my win rate will decrease, because price will have to make a big move to reach that profit target, and that doesn't happen every time. Similarly, if I decrease the risk to reward ratio and set the profit target very close to my entry, my win rate will increase, because price will have an easier time reaching my profit target. As you can see on the left, for backtesting I'm using 10,000 as my starting balance. Also, I'm only risking 1% of my account balance on a single trade. You should only risk 1 to 2% of your account on a single trade. Otherwise it will be difficult to handle losing trades that will come in a row. Money management is the key to success in this business. In this example, when I lose, I only lose 100. But when I win, I'll win 150. So, even if I lose 1 and win 1, I'll still make money. Some strategies work on intraday only and some work better on daily time frame. This strategy, however, works on all time frames. Unfortunately, many trading YouTubers on YouTube will show a hand-picked setup to earn trust of the viewer, to sell them a paid course. They won't mention what's the probability of the strategy, so you can manage money and not blow up your account. Trading is a probability game. If you are not backtesting the strategy at least 100 times, you will have a difficult time with trading, or maybe will never make money. That's why I'm here. Reason why I created this channel is to show you the real probability of any trading strategy out there. By knowing the probability of a trading strategy, you can predict how many losers and winners you can have in a row, and manage your risk per trade accordingly. It took me around 1 hour to backtest 100 trades, and while testing, some trades almost came close to hitting the stop loss, before going back and hitting profit targets. Don't panic when market is very close to hitting your stop loss. Losing is part of trading. Whole point of making this video was to show you the number of losers you can have in a strategy. No strategy works 100% of time. Even professional traders use strategies that only work 60 to 65% of time. As I always say, the key to make money is money management and trading psychology. Master that and you can become a professional. Here are the results of the 100 trades. As you can see, the win rate of this strategy is approximately 43%. In this backtest, I had 44 winners and 58 losers. I was able to win 6 trades in a row and lost 7 trades in a row. The reason why you are seeing 102 trades instead of 100 is because, at one point, I pressed the add profit button by mistake. So I added negative 150 to remove the profit. There's not much difference in the win rate, even after we took 2 extra trades. Win rate with 102 trades and 100 trades is still approximately 43%. So, after 102 trades, I was able to turn 10,000 into 10,750. In other words, I made a small profit. I made a profit of 750, which is not a big profit, but profit is a profit. Even though this strategy didn't produce a great return on investment like the other strategies we have tested in the past, parabolic SAR strategy was still a profitable strategy. If we had used 1-to-1 risk reward, we would have seen a higher win rate. But most traders will use risk-reward ratios higher than 1-to-1. You should always use a higher risk-reward. That way, you will always make money, even with a win rate of 50%. Just remember, money management is the real key to success in trading. Don't risk too much on a single trade. The MACD and Bollinger Band strategy that I tested 100 times had good win rates. Check out my MACD video if you want a better strategy. Or check out the Ichimoku Cloud strategy video to see its real win rate. Now you know the win rate of the parabolic SAR indicator strategy. Remember, I took trades based on the parabolic SAR, the 200 period moving average, and the alligator indicator. Furthermore, I took 1.5 times more profit than my risk. If you use a different setup, or use a different risk-to-reward ratio, your win rate will be different than this. If you reduce the risk-to-reward ratio, your win rate will increase, and if you increase the risk-to-reward ratio, your win rate will decrease. That's all there is to it.